Or has any further details will remain to be seen as the numbers come out. Economists expect there's not guaranteed accuracy or completeness of information or analysis supplied. So, downsides on the expectations that we have. Obviously, America are continuing with the jobless claims that they keep rising to 1 million per week, which is obviously a bit of a deterrent in the US economy. However, the other leading figures are July's release bounced further away from the worst on record, with a stabilizing expectations with the figures that are going to be released. ADP figures were missed expectations quite vastly in the private sector. They did want 1.1 million new jobs, but they got, I think it was approximately 160,000, around that figure. So it was quite a bad. Things are going to be probably a little bit worse than they have been. More and more people being out of employment. Those companies that can employ people maybe begrudgingly doing so, and in doing so, obviously giving them less of a hourly earning due to their own companies obviously struggling as well. So it all kind of comes around in full circle. So wages are expected to rise at 5.3% year on year, above the previous month's figure. So this is something positive again. However, on the downside, the previous month missed expectations, and there was a decrease as well. And if we look at the latest CPI inflation, this increased by 0.6%. But this obviously more of a projection on how the market is going to be. It's more shorter term, and it seems to move the markets a lot more. Obviously, the examples we have here, treasury yields and equities, and crude oil prices. Obviously, crude oil prices are always in the news recently. Yields are in the news quite often, equities as well. For example, if yields are up, then it's indication expectations that news will be positive. Equities at the moment are, the Nasdaq in particular, this is record highs. The other indices are doing quite well as well. The technology sector, companies like Apple, Microsoft, they're all going, what's probably going to happen from there. So what I'm going to show you now is our table that we created, just to give a little bit of a broader perspective of what was positive and what was negative on our indicator list. So as you can see straight away, there's 1, 2, 3, 4, 5, 6, 7, there's 7 against 6. So there's a little bit more negativity in the market than there is positivity, but it's not by far. And the previous and forecasted, the previous and the current figures for these indicators show a lot of them, there isn't much divergence. Obviously, core retail sales is quite a big one. That's been changed. Just looking through them now with you. So yeah, jobless claims and ADP, these are quite substantial as well. So again, just looking for what we can expect, and just going through. I'm just looking at the charts now, actually, just to see if anything's moving. No, there's nothing moving at the moment. Just waiting for things to happen. Still just over 15 minutes to go. So again, we'll just take it slowly. No need to rush. It's going to happen. So we're just going to have to wait and see. So yeah. So basically, choosing the best pair to trade. So at the moment, for months, is a lot of economies, governments, call them what you like, keeping their base rate unchanged due to the worry or the fear or whatever you want to call it of economies failing to recover or slowly recovering or not recovering at all. So a lot of economies are staying put with their base rates. We had the Bank of England base rate a couple of days ago. They indicated at 0.1%, which is probably going to stay that way until at least 2021. A lot of the other economies have stated that they will probably keep their interest rates at the same level. As I said, a lot of them are a little bit afraid to change it, be divergence, and we get another spike. Jobless claims. Call it what you like. We've seen everything these last 3 or 4 months, so nothing else is surprising that the interest rates are so low. So what we can see from the table is that Switzerland has obviously the most negative, and you have New Zealand, Australia, Canada, and the United States still in a positive. The UK, as we just talked about, is closing in on the zero, and Japan is just slightly under zero as well. So if you were to let's say trade the US against the Swiss franc, it would, and if the NFP came out as a positive, then this would be a good buy position for the dollar. So as well, as we go into the NFP. So as we go to the next slide, so this is the this is to show what currencies are doing well on the strength factor. So wow, as we see, we've got a few currencies that are not doing too well: the euro, the pound, the Swiss franc, the Kiwi, and the Danish kroner. Obviously, the Danish kroner is kind of a minor, so we'll focus more on the euro, Swiss, Kiwi, and pound. So we're seeing a very strong dollar. Yen is doing well. Canadian is also not favouring too bad. So it's, the reason I'm showing you this is because it's a very important factor that's good to take in just before the news release. So basically, if you have to see what's got the biggest divergence. Basically, so the biggest divergence at the moment is everything against, well, the Canadian, the Australian, the New Zealand, and the United States against the Swiss franc. This is probably the biggest divergence, as you can see. So if the report is positive for the dollar, like we just spoke about, then we should see prices moving in favour of the dollar against the Swiss franc. So it will be more of a better buy in that case. In contrast, a negative report would see trades against the United States dollar. So this is just something to keep in mind as well. So yeah, so at the moment, I updated this about 10 minutes ago, and it's showing the very weak dollar, Swiss franc, Kiwi. So these are things to look out for if the results are in favor of the dollar, and if they're not in favor of the dollar. So at the moment, the numbers, high numbers for, well, not high numbers, but there will be a good report. How good it will be remains to be seen. So we're going to just keep an eye on that and see what's going to happen. Just checking again for any movement at the moment. Okay, brilliant. So one last thing before we actually go into looking at putting in some levels and some good good trades, where to put them, most importantly, just run you through a few things. So like anything, when we're trading, avoid trade if you're not comfortable. The NFP is volatile. It's fluctuation of price movement in literally in a few seconds can obviously give you slippage. It can obviously not give you the prices that you want due to the reports, or due to the numbers that are out. If we get a very big, let's say we get a very big jobs report, something that's not expected, we could see a big move in the market, and when you want to close positions or you want to try and put in a take profit or stop loss, it might be missed because of the volatility and the fluctuation in the market. So this is something to look out for as well. Obviously, needless to say, stop losses and take profits with your risk management is detrimental to your trading. Don't risk more than what you can. You know, bypass emotional hurdles. That's very important. You know, when you make sure that you know the equity that you have, you can maybe afford to lose. And if you want to put in certain stop losses and take profits to mitigate your risk, then this is something that you should also do as well. So, you know, very, very important. Close out all positions. So again, it goes back to the volatility in the market, making sure that you know, you don't risk more than what you need to, and you don't also go into the market when it's too heavy. So, you know, too much risk to lose, basically, on a volatile fundamental news outlook. So, and the rest of them is just a general overview. You know, let the markets calm down before entering the trade. What you might want to do is, when you see a big movement in the market, maybe you might want to wait for a retracement, so you could up 50-60 pips. There's also always the added incentive that the market will come down 20-30 pips at least, so you can obviously put in a trade, put in a stop loss and take profit, making sure you're not risking too much, just to see and test where the market's going to be. There's also, you know, there's no worry about just testing the market a few pips, 10-20 pips on a small lot size, just to see where it's going to go. And obviously, again, you're not risking too much of your equity. Post data release is also very, very important. As we go into the NFP, there's lots of speculation about what it's going to be. You know, we have many people from around the world, you know, speculating, oh, it's going to be this amount, it's going to be that amount, this is what the market's going to do. You know, people can only speculate what it's going to do until the data is released. So, based on that, the post data release is also so that you can see just what the market can bring you for the next NFP or the next big fundamental news release. It doesn't have to be the NFP; it could be anything else. So it can be, you know, as you go into a direction, make sure that, you know, you don't go too much in, and you can just, you know, play around the market. It can be good to you. And then obviously pay attention to the divergence between actual and consensus figures. So this is very important as well. So if we had an estimation of, let's say, 1 million new jobs in America, and the estimation is 1,100,000 or a bit less, then this isn't really a significant number that's going to move the market. So what we were seeing before the coronavirus is the non-farm payrolls were usually non-performing payrolls. So in that sense, it would only move probably 20-30, not that much in such a high impact fundamental news release. You know, probably 100 to 150 pips is considered more likely to move the market, but 20-30 pips is not really much. So this is what we just disclaimed. Gaps of 20 to 30k are not considered much effective. So this is just something else to look out for as well. So what we'll do is we'll just run into some technicals quickly. So I've just brought up 5 pairs that will probably be looking to get into. So I'll highlight the euro dollar first. So what we're going to do, we're going to go on to hourly chart just to get a little bit of a short-term perspective. So what I'm seeing here is we've got it's trading at just over 1.18. We've seen it move up. This is probably a good point, 1.185. This is a good entry level, and we're seeing that 1.189. We saw this false break yesterday, and then we saw a few days ago when it went up to 1.19, and we see it come down. If it does get up to this level of close to 1.189, probably close to 1.19, I would say, it could come back down. So based on the previous data that we've got. So as we go to this level, we could see a possibility of a good sell position there. But it will remain to be seen if we see the NFP figures, because that's obviously 90 pips away. So a 90 pip move would be quite good. However, it's probably a bit unrealistic for an NFP in one go. So we'll see over the next 15 minutes post-release, and then we'll go from there to see how it's going to be. On the downside, obviously we've seen some support here at 1.18, just over 1.18. So we'll bring it down to about here. If it does break this section here, we could see it come back down, and then even further as we've got these supports here. But yes, this is a good entry point, and this as well. But we won't need to go delve too deep into euro dollar, because we've got some good levels there. So we'll go into the pound dollar. So pound dollar, this has been bearish for the last 24 hours. So we're seeing it move back down again. Again, we've got this spike here that we witnessed recently. I'm just checking the charts again. So again, we are seeing on the downside these kind of levels. This spike was on the 5th of August, so a few days ago. So there we had a bit of a false break, and then it moved up, and we saw this position here. So again, if it does maybe come down to the 1.305, we've seen some further support here, which is a good level as well, and then maybe here as well. So this is a very good level because it's 1.30, good psychological level. And on the upside, again, we've seen it quite bearish for the last 48 hours. So again, to get on this kind of wave, we're looking at probably roughly about here, maybe a bit further down. So let's just put a Fibbo in here just to see how it's going. So yeah, from the top to the bottom, yeah, we're kind of seeing these kind of levels. So there's a bit of a confluence line there, so a convergence. So yeah, yeah, it looks like, yeah, it looks about the same. Okay then, so we'll quickly go on to the dollar Canadian. We've also got some Canadian news coming up as well, so it's always interesting when all the markets, all the major markets are moving. So dollar Canadian, make this a little bit bigger. So again, as we go down, so this has been a bit bullish. Now it's got a bit choppy in consolidation now. So 133.4. So of course we've got this level here, 133.7. It's getting a bit of resistance around this level. So this would be a good level as well. Obviously we've got this V-shaped pattern forming at the moment. So again, the next level could be, if it breaks here, it could push up to here. This would be very interesting if it does. I'll be definitely looking out for this during the Canadian. So let's just see. That's 40 pips, including this. So it is realistic depending on the news. Again, we'll have to see. The dollar Canadian, the dollar Canadian pair is usually quite a big mover when the Canadian news is released at the same time as the NFP. So we'll definitely have to see that. Just waiting now for, let's quickly see what time we've got. Okay, we've got another 2 minutes. Approximately 1 minute, so just waiting to see. Yep, just 1 minute to go. So we'll just see what's happening with that. I'll just make sure I've got everything going for the NFP results. Okay, so as we see the next ones, we'll just go through, keeps making this shape at the moment. So we're seeing it come down to this one, to this level. And let's see, the data should be pretty close to being released. Just another minute or so. Okay, and here we go. So we put it on 30 minutes just to get a little bit better perspective. So US July employment rate falls to 10.2%. So US July payrolls rise to 1.76 million month on month, and the estimated was 1.48. So it's beaten estimates, and that's why we're seeing a bit of a strong dollar at the moment. So roughly about 20 pips so far. So my payrolls rise from 1.76 million to 1.48 million. So we haven't seen, like we were saying before on the presentation, we're not exactly seeing significant mind-blowing figures from what the estimate was and what the actual figure was. So we're not seeing much of a move in the market at the moment. Obviously, 20 pips on an NFP isn't really something to shout about on the euro dollar. So we're just going to wait and see what is going to happen. So we've touched this line here, the first one that we put in, so the 1.18, just over the 1.18, and it's bounced off that and gone back up. So now we're going to see if it starts to push up to this 1.185, which will be interesting. Again, for the pound dollar, we've seen that it's almost hit this Fibonacci level, and it's gone back up again. So it'll be interesting to see if it hits this next one at 1.3106. The Canadian has, at the moment, going down to this level. It's taken a little bit of time. We'll wait and see if that actually does anything. I'm just going to get the dollar yen chart out. So I'll put it down to the 30 minutes just to see how much it's. So again, 23, 24 pips. So US July jobless rate fell from 10.2%, estimated was 10.6%. So obviously a little bit of positivity for the American economy, but unfortunately not something to shout about. So yeah, the increase to 1.8 million. So interesting stuff. Let's check the gold, because it's been a topic of, well, a big topic for the last few weeks. Topic of conversation. So it's in a little bit of decline, probably on the back of the dollar strength. So that's $12, but again, it's kind of reversed to probably where it was just before the NFP. So let's take a little bit more of a focus on the euro dollar. So it's starting to fluctuate a little bit more now. It's pretty much retraced fully back to where it was in the beginning, completely now. So it'll be interesting to see if it makes another attempt for this support level, or if it will start pushing up further into the next level. Obviously, due to the pandemic around the world, the NFP seems a little bit insignificant in some respects, because a lot of investors are turning their attention to other geopolitical events, such as the obvious one, the elephant in the room, let's say, of the pandemic. So when the NFP comes along, it's not exactly a big surprise if the markets don't move as we, let's say, have seen them move in the past. So gold has pretty much retraced completely. We've seen a bit more of a spike on the dollar yen now, but again, it's pretty much gone back. It's kind of being pulled back down a little bit. We'll just expand that a little bit. So, I mean, the levels that I would look at here, we've got the obvious one where it is at the moment. The next one would be probably the double top, which has actually found some resistance a few days ago. So this was a false break. This may be another false break, and we could see it move back down now as we a bit further. So this one, so if we take from this example, this one over the course of a day fell 50 pips. So we could see another move down to 50 pips. Obviously, it will need to break probably these areas first, and maybe this area where we've got another kind of a little false break as well on the downside. So if we can get past the 105, let's say 50 psychological level, we could see it even push further down to these new lows that we've witnessed earlier in the week. So this will be very, very interesting as well. So just monitoring every chart now just to see if there's any kind of flare up as we go into the first 10 minutes post NFP. It'll be interesting to see any kind of late comers into the market to kind of start moving the market and maybe get some irregular spikes. So this will be interesting to see as we go in. So dollar Swiss, like we said before, it's kind of like pretty much retraced 100%. So is the pound. Gold earlier did as well. So, and the euro dollar. So we're just waiting to see if there's going to be a little bit of a breakout in the next 5 or 10 minutes. We've got the analysts now talking about what the what this means for the US economy. The main thing going into we forget that, you know, it's August now. These are the July figures, obviously. So we've got August, September, October, November, December, only 5 months left until the end of the year. And more importantly, there's only 3 months until the US presidential election as well. So within these next 3 months, there'll be a lot of tit for tat. There'll be a lot of you know, fluctuation in the market depending on if there will be a realistic Joe Biden presidency or if there's going to be another 4 years of Donald Trump. So this will be very, very interesting. We've also, if we just take the dollar yen, as we can see, it's trying to attempt to go back up this double top at the moment, but it's not really having that boost. So it's really got this kind of support at this level now, just dipping down a little bit. So it'd be interesting if we line again this level to move back up to the next target of 105.8, or as I said before, to fall back down if we can get below this kind of this target of this support. Then it will be interesting to see if we can keep going, and that would be a good sell position if we can get through this this period here. Gold, on the other hand, we'll just expand this a little bit. We can see that, as we said before, $14, $15 in retrospect of what it's been doing in the last couple of weeks. $14, $15 move during the NFP isn't really nothing to shout significant. So we can expect it to probably retrace and go back to being in consolidation around these kind of this kind of area. It did obviously break through this spike, but it's retraced, so there's a little bit of a false break. So if it can break out of this kind of zone here, this $17 zone, so 2047 to 2064, let's call it $20, just to keep it a bit more round. Just move this down a little bit. So if you can break out between these particular lines, we go for fresh highs here, or the possibilities are endless on the support as we go down. We've got this support here and this one, and of course this was only at the beginning of the week when it was just under. There's a lot of potential for it to start moving on the downside should the US dollar gain a little bit of strength. But as we can see here, we're seeing a little bit of a push on the upside to the euro dollar. So this attempt here has pretty much been cancelled out now. And we can see the pound dollar, again, not much in the way of trying to attempt to start pushing upwards in that respect. And the dollar yen moving downwards as well. I'll take a quick look at the Aussie dollar while we still have time. So again, nothing really of a significant move. The Aussie dollar pretty much has been trading, if I put that up to the Kiwi dollar, what are we on? We're 1 hour, 1 hour. So we haven't really seen too much in the way of a significant move, but for the last couple of weeks, the two pairs have been trading pretty much identically, obviously at different prices, but they've both broken a bit of a psychological barrier, in the sense of the Aussie dollar has been trading above 70 cents for a while, then 71 cents, and then it made its 72 cent mark in the middle of the week. And the Kiwi as well has been trading above the $66 cent zone as well. But it looks to be coming at 8.5, very, very psychological. And also it's at the top point where we had the last spike yesterday, and then we had this drop. We had this drop a couple of days ago. We had the attempt to push back up, but it hit this resistance and it fell back down into this zone here. So we're just pushing, waiting for it to push back up a little bit more. Same with the pound dollar. And as we go across the board, again, gold, it's trying to push back up. We gave it this little region of 2064 to 2044, and we'll see if that seems to break anything at the moment. The dollar CAD has been a little, so we've had that at the moment. Gold, on the other hand, it's looking like it's gonna probably get to that level of 2064, and then we'll see what happens from then. As I said, the weekend brings quite a lot of fundamental news. geopolitical, especially over the weekend, and we're going to see more of that in store, as I said, as we have the lead up to the presidential elections, and more information comes out about the pandemic. We've witnessed today that France might be the next country to stop its air bridge to the UK and to other countries. So more significant weight on the Eurozone itself. What will this lead to? We'll probably find out on Monday. Just looking at the yen again, now it's dropping. So as we said before, if it goes down to this psychological level, 105.5 approximately, we could see this break and then to keep it falling even further. So yeah, very interesting times. We'll just wait until the next couple of minutes are over just to see what the realism is for going forward. So I'm just going to attempt at fresh highs, the 1.19 or even the let's see, yesterday's high of 1.1915, and then we've got the downside as well. So we're looking at about 100 pips. It's easy to do in the course of an evening session. Obviously, once the NFP is done, if there's no further news releases, then a lot of traders start their weekends early. They don't hang around too much after, such a hectic week. But as we go into Monday's session, a 100 pip move is nothing really. So let's take a look at the Dow just quickly. So again, a little bit of negativity on the Dow as we've gone into it, but depending on how it's going to affect each sector, where the jobs are specifically, the hourly pay as well, we're going to see these indices being affected. I'm just looking on Bloomberg now. It's looking like 3 of the indices are just trading a little bit less on the day. So if we look on the daily, it's just kind of got that doji there. So it'll be interesting to see if it just does keep falling based on the news. So a lot of things to look out for on the weekend, and Monday brings its new week, and we will go from there to see what's actually happening. So I'll leave you with the indication of, like we said before, the euro dollar moving up a little bit. Let's just get rid of this. Sorry. So yeah, the euro dollar moving upwards, the pound dollar moving up, and the dollar yen specifically just kind of like hitting this zone. And then the gold itself, we'll see how that's going to go in the next until the trading session ends in approximately 7 or 8 hours.